The risk of loss in trading futures and options can be substantial. Therefore, only genuine risk funds should be used in such trading. Futures and options may not be a suitable investment for all individuals, and individuals should carefully consider their financial condition in deciding whether to trade. Option traders should be aware that the exercise of a long option will result in a futures position. Information herein has been obtained and prepared from sources believed to be reliable. Comments contained in these materials are not intended to be solicitation to buy or sell any of the commodities mentioned. Past performance is not indicative of any future performance. Opinions expressed here are the opinions of the author only, and not the opinion of any firm the author may be affiliated or associated with.
All right, thanks for joining us. I'm Michael Yorba on Commodity Classics. Jake Bernstein's with me. We're talking about the Yorba TV FX Fund. Last segment, we were just about to get into the compound interest schedule, and I was just going to start bringing that out. Let's bring Jake back in right now. Jake, let me finish that up before we move into how we can increase the compound interest in the fund and reduce the time it takes to do that. All right, when we left off, let's say we unitize this at $50,000. At 223% interest a year, 141 days to pick up $50,000.
Good return. And
throw it back in. Thank you. The real money portfolio is running at 6-to-1 leverage. This $50 million or $5 million account is running at 3-to-1 leverage. So let's say that, and this is just one of, obviously if you're getting 61% interest on your money, the time frame is different.
Right.
But the general theory of what I'm explaining to you is the same. Now, and I've done this, by the way. This isn't just a theory I'm thinking about. I really did this with money. So let's say that we do this. We move the leverage, which I love this business. You can just throttle that interest up or down at will in a myriad of ways. We move the leverage up from 3-to-1 to 6-to-1. I think you're probably connecting the dots here. Instead of 141 days to double the money, 70 days.
Yes, yes.
So every 70 days, I can add the interest income back into that currency pair, and I'm compounding my money that much faster. Let me show it another way. And let's say that rather than our unit is $50,000, we want to speed it up a little faster. But we don't want to change the leverage because that increases our risk the higher the leverage, right?
Correct.
So let's not unitize it at $50,000. Let's unitize it at $5,000.
Okay.
All right. Then 1 unit is 14 days. So every 14 days on the Euro Turkey, we're picking up another 5,000, which is going back into that currency pair, maintaining the leverage at the, let's say it's, and this number I'm talking about is at 3-to-1, and not the 6-to-1. And then if you move it up to 6-to-1 leverage, every 7 days, you're adding another 5,000 into the compound interest schedule to increase it.
Right.
So what we're going to do is we're going to be able to go through the different currency pairs. There's 15 of them right now that you have time frames on. When am I going to throw that next $5,000 back into that currency pair? Maintain my leverage at a constant, which is not increasing it. Now, that's the mechanics of how an increased, you can increase your revenue through interest in the diversified portfolio. Let me stop there and let you ask me some questions.
Michael, how would a secular change in the direction of the dollar affect this? In other words, the dollar bottoms out, let's say, and starts on a 1 or 2 year uptrend. What happens?
Oh. Well, there are certain currency pairs that are just inherent in the way you have to be to take advantage of the interest income that maintain that you have to be long the dollar. So they're in there already.
Okay, gotcha. So it's balanced.
It's balanced.
Got it. Got it. Very good.
And as a matter of fact, let me show you the balancing of it. It's an exposure. So in Canadian dollar, I've got, and these are units, those are U.S. dollars. I'm going to roll this down until you see where we come up with, or roll it up until you see where we come up with the U.S. dollar. And you're looking at the balancing of these different numbers in different currencies. We're a little light on the Swiss franc, but that's the way it works out. And let's see here, pretty Japanese yen, we've got about 4 million. This is the leverage size. And then euro, 922,000, 7 million in US dollars.
Interesting.
So what we've got here, and I'll get these positions back on, is let's come on back to us for a second. Thanks, Don. What we've got is a portfolio that's diversified, long and short dollar, and in other currency pairs that have nothing to do with the dollar directly.
Right, exactly. Is this a managed program, Michael, or a software program that you sell? What is it?
It's a managed fund that I'm putting together. Now,
Brilliant.
You like it?
Love it. Unless there's something here that I'm missing, it looks fantastic.
Thank you. I really appreciate you saying that. Now, here's the reason for the fund. The fund, even is because it's in the FX industry, it has to be called a speculative vehicle.
Sure.
Right? But I know some guys that are able to, and let's come back, let's keep Jake in the picture here. What we can do is we can put a insurance policy underneath this, and there's enough interest income in this to pay the premium to guarantee the principal.
Based on what options?
Not based on an insurance policy.
Literally an insurance policy. That's incredible.
That's right. I know some guys that are working with one pair for the Chinese yuan and UBS to put an insurance policy underneath this thing. We could turn it into like a secured note process, and I think people are looking for this product.
Very interesting.
Because we both have strong feelings, and tell me if I'm wrong on your opinion here, that we're going to have much greater volatility in both the equity, the securities, and the futures markets.
Absolutely. In fact, I think the volatility we've seen in the last 6 months is probably going to look small compared to the next 6 months.
So there's a lot of people that aren't those great traders that can turn on a dime that are going to be looking for higher than 3% yields when they've got devaluating currencies, and not just in the United States.
Right.
It's an international product. Now, there's been some questions here in the shout box. This thing is like chock full. It looks like a Webster's dictionary instead of just a couple of real quick ones. One of the things that I've come to find out about this, and please jump in with any questions along this line, is the things that I've come to find out about this is how do you manage the portfolio so that the losses don't outpace the interest income?
Right.
You're going to find it so remarkably simple. Simple, because these currencies, as you know from trading them for 40 years, they have wonderful trends.
That's right.
They have. Now, there's always give and take. They're always fluctuating. But if you keep the leverage right and you manage them correctly, obviously, ladies and gentlemen, you got to know how to trade. I mean, you know, I mean, I wouldn't turn my mother on to this and say, here it is, go, you know, call me in, you know. You do have to know a little bit about how to trade, but the point being is this. You can manage them the same way you use money management in your futures markets, except you have a greater latitude with leverage. If this thing starts getting out of hand, I can drop that leverage to 1-to-1 and sit anything out.
Right, exactly. So how do you know when you're wrong on a particular move?
Oh. When this thing starts telling me through what my parameters are, I'm on the wrong side of that trend. And I always put trailing stops in on everything.
It's a beautiful thing, Michael.
You've got to be able, the spreads are a little wild sometimes. So you've got to think about how to play those spreads. And then, some of the downsides I've seen on trading this thing, every once in a while you're going to get a real smart-ass trader handling that desk. And he's going to stretch it and take your stop out. So you have to pay attention.
Interesting.
So I thought that the world could use a product like this, a minimum investment of $2,500. So the guy that's driving the trash truck can participate just as well as Carl Icahn. Because that poor guy always gets cut out of the good stuff.
Interesting. Is it a limited partnership? Is it a fund? What is it?
I'm going to set it up as a fund. being now I've been approached by a pretty decent size house that has securities. They've got bullion, they've got equities, they've got an investment banking division, they've got futures, and they have insurance.
That's great.
And so what I'm trying to do is I'm going to set this thing up so that what we can do is cross-collateralize. That's going to take a little bit. But at very least, if we've got that volatility, here's a place to sit in cash that shouldn't hammer you on the fallacy that you're safe because you're in a U.S. dollar-denominated CD.
Right. That's great, Michael. That's really great.
So I was going to charge them like 3% for the management, no incentive fee. Obviously, there's no commissions in this business.
Yeah, that's great.
Let's get a couple of questions out here.
Okay.
No more questions from you?
No, from me, no. I'm very impressed. I'd like you to let me know how it's going and what's happening with it.
I'm getting calls from people wanting to send me money now.
Yeah, if you have a circular offering memorandum or anything like that, I'd like to see it.
What I'm going to do is I'm going to post it up on the website so you can download it.
Good idea.
And then, just open up an account at will. There'll be a little bit of qualifying to them so that they understand that.
Right.
This is not a savings account, but it'll be liquid, so you can move your money quickly without penalty. Let's get the questions. Does currency lose value faster than interest you're getting on it? It can if you don't manage it correctly. Yes, it certainly can if you get out of hand with it. Aussie Pete? Michael, I'm interested in exactly how you'll manage these trades in the portfolio. What is your strategy and parameters for booking profits and taking losses? Well, my Aunt Helen never gave me her blue ribbon recipe for that pie crust. She just wouldn't do it. And she was my great aunt. So, but not to be a smartass with you, Aussie Pete, because I don't mean to do that, but I do mean to say some things are better left to a personal conversation than a television broadcast, and that might be one of them. So what I'm going to do is this, ladies and gentlemen, and as well as you, Jake, is I'm going to take some time off on the show, and I'm going to work on this fund. I'm going to leave the television or the IPTV network up. All the social networks are going to stay up. The archives for this last month are going to stay up, so that anybody that would like to participate in this fund, and I've got calls today about it, can call me. They can participate with us. If there is a commodity index fund that wants to put this underneath their fund to beat the rest of the competition by maybe 15-20% interest, hey, I mean, we're open to any of it.
Great.
So, no more questions? I mean, Jake's webinar. You have a webinar.
No.
Yeah.
I have one in 2 weeks. It's going to be on how to trade seasonals. It'll be announced on my website, www.trade-futures.com. There you go. Look at that. Impressive. Yeah, that's the one, all right. And, Michael, seriously, send me information or post that information on your fund. I want to look at it.
No problem. As a matter of fact, Jake, let's go back to Jake. I'd be more than happy to walk you through it myself personally.
Good.
You got my number, no problem. But ladies and gentlemen, don't fret. As soon as I get through the hard work I have to go through to get this fund ready for you and the rest of the world, we'll be back. And as a matter of fact, I might even throw in another couple cameras here on this thing and expand this deal.
Good. Sounds good, Michael.
Thanks, Jake.
Michael, thank you. Best to you. I'll be talking to you. I've got your number. You got mine. I want to thank all the viewers for all the great questions. And the best of trading to you all.
Really. Good luck and good trading.
Michael.
You're welcome.
Take care. Bye-bye.
Bye. All right, ladies and gentlemen, thanks so much. I appreciate that. Get in contact with me on my social network. Just click on the picture right there. Any more questions I need to answer for you in regards to this fund, the development of it, we'll keep you posted on the website. Don't worry, we won't take too much time off. Talk to you soon. Thanks for joining with us. We really appreciate all of your participation, because it was you that helped us do this, and we're going to do more of it in the near future. Good luck. Good trading.